All right. Well, hey, great to be on stage again. This is fun. Let's invite everybody up. And if you don't already know, I'm Mike Babbitt. I lead international trade for Pinnacle Financial Partners. And we are formerly known as Synovus. Well, we're in the process of transitioning to the name Pinnacle. Still getting used to that. But we have a great panel here, and we have a number of things we're going to talk about. I will say that every session that has happened at this conference could be titled Trade Finance and Transition. So one of the things that we're going to do is I'm going to allow each of the panelists to introduce themselves, and then I'm going to go get a question from the audience. We'll find our lucky question to kick us off. We also have Slido to be able to submit questions. But be thinking about what you want to ask this distinguished group of people, because we've really got some top talent here and a lot of experience. So why don't you kick it off, Maria? Why don't you start there and we'll come this way.
Maria George, I'm the CEO and co-founder of ClearEye.ai. We are a fintech AI platform that does trade finance compliance and trade-based money laundering automation and trade back office operations automation. I'm based in New York. And thank you. Good to meet everyone, and good morning.
Dominic Capolongo. I am the Chief Revenue Officer at LiquidX. LiquidX is a technology provider, end-to-end solution for anybody in the trade finance space.
Anubhav Srivastav. I run North America trade finance business at JP Morgan. Prior to this, I was 15 years at Citi, started on the M&A side, and then with trade finance for about 10 years at Citi, various roles there. Been with JP Morgan for about 5 years now, based in New York.
Excellent. No, thank you very much. Great brief introduction. So by now, you all knew I was going to ask a question, and you've all got your questions queued up, right? So who wants to ask the first question? You've got some great experience here. Paul, I saw your hand.
Good morning. Throughout the conference, we've talked a lot about technology and all the things that go with that in trade finance. And in existing shops where we've adopted the products and services to partner with folks like yourselves to enhance what we do, we don't talk a lot about the human element to that. And there definitely is one. You know, we can learn how to use your product and do that, but we've got a real range of people and skill sets in our areas. And I guess my question is, how do we adapt in two different ways? How do we adapt in new hires? What skill sets should we be looking for? And secondly, for the tenured employees that still have so much institutional knowledge, but may lack some of the technology skills, how can we help them upskill? How can we get them into the fold so they remain as productive as they are today?
Yeah, I can go first, and more of a bank perspective. Look, it's a great question. If you go back 20 years, 25 years, a lot of the trade finance workforce and leadership came from operations background. And that sort of shifted as sort of technology evolved, new products like supply chain finance, receivables finance, all of these products became more technology enabled. And you had the concept of sort of product managers becoming more relevant. And so the product function itself drove a lot of the talent, and people who were coming in were specialists in products themselves. And I think as the technology has evolved, as the businesses are evolving, everything that's happening around us sort of post-COVID, the workforce in trade finance will require a very different skill set going forward, is my view. I don't think you will have more product specialists or specialists as such, but the skill set will more comprise of people who understand the technology. You don't have to code, but you have to really understand the implementation of technology, the use of technology to solve business problems, as well as data. Being a data expert is, and it's not being the data expert, it's the recognition of the patterns. That'll become a critical component of the future trade employees, is my view. The second is we're seeing a almost blurry line between corporate finance and structured finance now. And so the new sort of wave of employees that'll come into trade finance will also have to get a little bit outside of the realm of trade and start thinking more structured solutions. Because the client's problem have evolved a lot, right? With shift in supply chains, with supply chain constraints, each industry is having a very nuanced issue, right? If you think about technology, for example, the problem that data center supply chains are having are completely different from the problems that energy supply chains are having at this moment. And becoming and specializing and understanding those supply chains and client problems will be very, very important for any person who's coming into trade finance. You have to go deeper in your clients' supply chains, their procurement organizations, and how they are behaving and changing, which wasn't required as much in the past. And the third is the tech element of the whole thing, right? If you think about supply chain finance as a product, it's getting much more embedded within the ERP system. So if you think about receivables, and love your views on this, getting much more embedded in the ERP systems, or clients are looking for much more embedded finance solutions. And so if you're coming into this business, I think that understanding of technology, how the AI is going to shape the industry and be applied to client problems, along with that understanding of working capital and look at it from a client lens, will become much more important than becoming a product specialist. I don't know if you...
Maybe Maria, do you want to take that
Sure.
from there?
Thank you. Just to add on to what Anubhav was saying, but I'll start with the data point. And it's not in the context of trade finance. It's in the context of our last Super Bowl 2026. So I researched that, and I came back and said that 23% of the ads in the last Super Bowl were all related to AI. And I was very surprised to see that number. And I saw that, I'm like, interesting, because I love Super Bowl, watching football, but I do watch Super Bowl to see the ads. I mean, so I know a lot of people do love to see the ads coming in. And we all know that the ads for Super Bowl, a lot of millions of dollars are spent on the research, and they find out ads that are connecting with the audience. So why so many AI ads this year? That should tell us something. And for the new members, to Paul's question, when we're hiring new team members, when you're hiring younger talent, it has to be someone who will understand AI. You don't have to code. I agree 100%. You don't need to know how to code, but have the ability to learn new things, leverage AI to learn new things. That's an important aspect. The second part of your question, how do you have like a lot of talent who is really good and has the trade knowledge, has the domain expertise, to enable them to learn something new and use the technology. And I always say this from a product company, have a few champions in your team who is ready to do that first, and they will be the enablers who will take it forward and help us do any implementations much more faster and do it more efficiently.
Yeah, I mean, I'll kind of take up the back end here. I totally agree that in terms of new hires, they have to come in with at least a basic knowledge of kind of how technology is developed. I mean, at the folks that are on the ground, probably are our best source of ideas for the next level of our technology, or new pieces of technology, or new modules to our technology, because they're faced with the continuing and frankly will never go away, but just the continuing manual challenges, or the impact of regulatory demands, or new internal regulations and procedures that are creating friction in the system. So it's great for people to have a basic understanding of technology and how it develops and how it can be used effectively. But that's only the beginning of it. At the end of the day, my personal belief, being the old guy up here on the stage, is more about us. Is more the older folks, the more senior folks in the organization who don't have the understanding to themselves about technology and don't really intuitively know how it works, nor, and this is really important, nor do they actually use it. So while you get capabilities and you have a good set of people to manage the flow and identify pain points, Ultimately, you need, and this is sort of to your champion comment, you need the people up top to really take an interest in understanding it as well and trying to learn it. I can't tell you how many of the senior folks, couldn't take our technology and do a simple demo for a client or explain the functionality. And that's going to be a bad thing when you need them to go up to the new product committee or to press through changes and ideas. So I would tell you that it's a two-sided coin. Getting good talent at the ground level is great, but you need people that are in the organization to continue to want to learn and understand. To your question or your comment about structured, I absolutely think you are spot on. The advent of private credit. Structured finance in the 90s was the kind of banking super secret, right? It kind of went away for a while. It's come back again, and I think it's really important because trade, the steady Eddie sort of stuff, letters of credit and guarantees that when I started out in the 80s, has now been superseded with open account and commodity stuff. Now inventory, it requires a much more creative mindset than the old stuff. So I think that's absolutely correct as a talent.
Yeah, no, I think that's a good perspective and maybe a good range of perspectives too, from a big bank to a tech company and also from a supply chain company. And you mentioned, Dominique, you mentioned a lot of the different changes related to the industry and some of the kind of the shift. I guess you all kind of talked to that, but from your seat with all of the international, call it supply chain financing that your platform enables, are there any changes that you're seeing from what the banks are asking for, or what the profiles of clients that are coming, or what's kind of your take on some of those types of changes?
Sure. Our business, particularly at the bank level, tends to be a thin margin business. It's a business that will always be around. It's necessary. It's consistent, but at the same time, where the banks are generally focused, the margins are not going to be, as exciting as an M&A deal or a high yield. So we're always constantly fighting for resources, all over the place. We're basically where we're seeing a lot of changes is on two fronts. Number one is the expansion of the business as much as possible to address a larger pool of clients. So the embedded finance comment. Embedded finance is meant to increase the addressable market. It's a great new tool. It's easy to use. It deals directly with SMEs who have limited finance functionality and capabilities or resources. And it's easy and simple to do. The problem is that it's onesies and twosies, so you really have to have a very big amount of volume or a large amount of volume going through to make money. That's number one. Number two are the constant regulatory changes and the evolution within the banks themselves. On the good side, there's, I think, a much more adoption of technology within the trade space and a recognition that it has been and continues to be one of the major manual friction points in the banks. And I think there's now a better understanding of that and the importance that technology can, how it can handle and address those problems. But I think the banks are trying to figure out where to start. So you're getting a very, everybody's starting at a different point. And so you have to adjust your entry point as a technology provider to each individual client, pardon me, to address the specific pain point they're focused on at that moment. And then go on their journey through the other things, the other friction points in their workflows as they want to. So you got to be flexible in the approach to each client.
So kind of tying the two questions together, it sounds like flexibility and reducing friction is important in every aspect of this, not just the supply chain element, but from the sales aspect as well as the AI and some of the document processing, document review stuff as well. I'm going to step off the stage because I want those of you who have questions to be able to use this microphone to ask them. And with that, I'm looking for my next participants. While I'm looking for questions, those of you who are here can wonder which of these distinguished panelists fought against elephant poaching in Mozambique. So be thinking of that as you're thinking of your question as well. John, I see your question back here.
Thank you very much. Question from Terapay. BAFT has been very active around the Basel III initiatives and the updates, and particularly here in North America, we've seen maybe possible changes that somewhat are a relief, right, in terms of what we call the capital risk allocations and kind of how that's going. Can you just elaborate a little bit in summary of what that means, and is there any disparity still, obviously, in how we see this affect, for example, in Europe?
Maybe that's for me.
Anubhav, I'll let you take that one.
So we're still studying the actual implication because there's a lot of changes that are going to come. The expectation with the current draft is that it does make American banks a little bit more competitive relative to European, Asian banks. We've seen that disparity impact our business from a capital perspective, like you rightly pointed out. With the current draft, our expectation is, with the capital relief coming in, that it would allow the American banks to be more competitive. I think the big gap, if you really go to the nuance of this sort of structuring, was the ability to use insurance in a lot of these structures. And that has been a big pain point because the European banks and the Asian banks get a substitution method versus we don't get that. And I think with the new laws coming in, I think there's going to be parity on how the insurance gets used on the insurance side. The second is the use of the standard method versus the advanced method in calculations. The hope is that that also gets standardized across the banks, which should make American banks a little bit more competitive. So there's a lot of optimism. I don't think it's implemented. I think it's out for comments right now. Once it gets implemented, there's a lot of optimism that it would release a lot of the capital. Having said that, I think there are implications around operational capital, et cetera. I don't know how that impacts each business, and every bank will have a different view on that. I've worked at Citi, I've worked at JP Morgan. It's a constant piece of discussion for very large banks because you have a large amount of GSIB charges that get attracted by the bigger banks. So I think there's going to be some disparity between how it impacts regional and smaller banks versus the larger banks as well. But all in all, I think on an international level, it should make US banks more competitive is our view.
Excellent. Thank you.
I would just add, on the technology side, we have been seeing two things from this. One is an increased interest in being prepared to manage capital much more effectively. Depending on which way this goes, you either are going to get a release of capital or things will continue to be a challenge. And so we've seen an increased interest from a number of banks globally in terms of distribution technology, just being able to distribute effectively and manage that. The other thing is, in terms of our core systems, our core platform, the ability to really flow in insurance policies and their particulars so that you can manage limits more effectively, but also report on net exposure. So to the extent there is going to be capital relief, you start tracking it now to identify the capital relief. So people are starting to think about, what does that mean? What should I think about if it does happen or if it doesn't happen?
It seems like Basel, as was mentioned previously, is the rule that never dies, or it's always a new iteration of it and new applications, and it seems like we've been discussing this for a long time. So if any of that happens, you heard it first here, right? We've got a few questions coming in, so I don't think I'll walk down in the audience because I will, but we'll take some of these questions here on the panel on the screen first. But anybody figured out which one's the elephant poacher? Not the elephant poacher, but the one who fights against elephant poaching. You think it's Anu? Maybe. Anu?
I am not.
I'm
I wish I
surprised you didn't
was.
say it was me.
No, actually, it's Dominique. Dominique is our elephant saving
Elephant saver. Right.
elephant saver, not elephant poacher. But okay, Maria, why don't we let you choose from your questions here? You've got a few that I think you're uniquely qualified to answer. Or if you want to take any of those, you can kind of run with it.
Oh.
But sorry to put you on the spot like that.
No, it's okay. Clients asking maybe a question for you, not for me.
Sure.
I can talk about the second question, recommendation for panelists on the future leaders, because that's near and dear to my heart.
Okay.
And I will, of course, bring an AI flavor to it. But let me start by saying I'm a big proponent of when life gives you opportunities, take it. Okay? It's always easy to say no to things, but saying yes is important. And you say yes, and I'm saying that from my personal experience. I had the opportunity to start a company. I had my family, was very supportive. But then had I not said yes to it and taken the opportunity, I would not have learned half of the things I learned in my entire career. And I'm a firm believer I learned more in the last 5 years than I have learned my entire career. And what I tell the future leaders is, life will give you opportunities. Take it and say yes. You will figure out how to make it work. We are all smart people. We'll figure out. But at the same time, when I say that, it's a lot of hard work. Be ready to put in the hard work. I heard at the luncheon yesterday, the PNC session, one of the things that she said many, many times is the 8 a.m. to 10 p.m. work schedule. I'm not saying that's required, but hard work pays off, and also continuous learning. We all talking about technology changes, AI changes. It is so much easier now, literally, to come up with a presentation in like 15 minutes versus we have to compile the entire slide deck, which would have taken us hours. So leverage the tools out there. Coding is easy. The technology and the business operations, it's emerging. It's coming together. And you don't have to ask a technologist to run queries for you. You can do it yourself with the help of Claude coding right now, and it's not difficult. So I would suggest learn more, leverage AI as much as you can for everything you can. Learn about new tools, learn about new technology, learn about new concepts, new domain. That's what it requests. And the other side of all this is what AI cannot ever replace is the aptitude. The right aptitude is always looked for. Every single leader will be looking for the person with the right aptitude when you're looking for the next level of promotions. Emotional intelligence matters. AI will not replace those two. So just 3 different perspectives. Just wanted to share that.
No, thank you very much. And I'm sure as the future leaders, I see several of your faces out there right now, probably really appreciate that perspective, especially for somebody who's really kind of risen through the ranks and been successful and stood on your own 2 feet in your own right. That's, I'm sure it means a lot coming from you. So thank you for that.
I mean, if I can just add one thing, I can tell you, you've been in this business much longer than I have, but in my 20 years, I've never seen the kind of opportunity that exists for trade finance as a business that's coming in next 5 to 10 to 20 years. So if you're entering this business, if you're new to this business, you are at a perfect juncture. We went through a transformation from a pure LC business, and most banks and other people define it as core trade, and it is core, into more tech-driven business, into working capital side. And that entire equation is getting evolved at this juncture. And what's driving that is, if you think about especially on the corporate side, the clients, their own business models are getting disrupted. The Amazons, the Microsofts, Metas of the world are facing a existential threat, if you can believe it, and they're fighting a war. And if you talk about some of the deals, a lot of people are here seeing the data center deals as an example. The war for chips right now, it's the disruption that these companies are seeing. Same thing is happening in healthcare. Same thing is happening in energy. The disruption that these companies are seeing, they need banks and non-bank partners to evolve. They need the technology to come in and help them with their own business models. And so I think trade is so uniquely positioned. Most people have probably seen this. We run an initiative called SRI, Supply Chain Resiliency Initiative. And it's a very big initiative by Jamie. And I can tell you, trade is at one of the central products around that initiative because it's all related to supply chains. It's all related to resiliency in the supply chain. And so our business is very uniquely positioned. If you're in this business, I would highly recommend that you take it seriously. I think great point made by Maria. I think, look, the technology, the business, everything will keep evolving. You will learn. Nothing can replace the attitude. Nothing can replace the desire to be on time. Nothing can replace a person who takes the initiatives and goes and gets it done on time. So stick to the basics. I think that's far more important than anything else.
Excellent. No, thank you. Let's keep with the top question. But before I ask that, now that we've discovered who is one of the people who protects elephants, let's figure out who on the panel has a trip to Everest planned. So with that, top question. Let me just pose this to everybody, and we'll let, if you have an opinion or a thought on this, let's take the top question. With an increased number of states adopting the recent UCC amendments, especially Article 12 controllable records, will this lead to possible changes in the way banks offer working capital solutions? That's maybe tangential to the other question that was asked, but does anybody have any thoughts they'd like to share on that? And if not, that's fine. We'll skip to the next question because there's a lot of questions here.
Yeah, I think there's some really good questions. If you don't mind, I'll answer that. Digital trade capabilities.
Okay. Yeah, jump to that one.
That's super interesting. And it's a bit of a trend. Look, I think as clients in their personal lives, the treasurers, the CFOs, they're seeing digitization all around them, right? They are seeing that they can make payments within a second. They always ask this question to banks, is like, why am I able to make payment on a personal basis in a second, but my payment takes 24 hours, 48 hours still? Why is it that I have all the reports in my cell phone? I can see whatever transaction I did. That's not the case on my business side. It's a constant question. In the trade space, however, that reverse inquiry is very limited at this point. It will change. What is driving it and what will continue to drive it is the banks continuing to innovate around it, and fintechs play an amazing role. I'll admit that fintechs have forced the banks to think differently. They forced us to look inward and say, the clunky system that we've had for 100 years, that's not going to work. We have to replace it. And it wasn't just competition. And we're leveraging a lot of the fintechs as we're doing our own business. But I'll give you a very simple example. Almost 10 years ago at Citi, for the first time, we were doing this SAP implementation. It was going horribly wrong. And we asked the question, like, why wouldn't we have some kind of adapter, right? And we did this on the payment side. And that was the first time a bank built a trade adapter for supply chain finance where this code goes into the client system, does all the work, and sort of comes back with the file that was needed. And it was fascinating to me that other banks took 5-10 years to actually adapt that technology and evolve. Hands down, Citi was winning every single SAP deal as a result of that adapter. What did it cost? Maybe $1 million, maybe $500,000. And Citi basically won every single deal where a client had it because you could just say, I'll go live with you in 2-week period. How did the idea come by? Was Thalia. Thalia, which is now part of SAP, built a similar adapter, and the bank said, why couldn't I build that? And so I think the innovation will happen. I think the more fintechs and technology companies will drive some of that innovative, will be at the forefront. But I think the banks, and then what will happen is one bank will do it. Very similar thing is happening now on the receivable side where receivable adapters are coming in. You probably have seen some of that as well. and that'll drive further adoption. The same will happen on inventory side as well. But I think it's less of a reverse inquiry because clients don't know how that would work. The banks are still and fintechs are still leading that innovation.
Yeah,
Okay.
I mean, I don't think there's I totally agree with you. It's not like the clients are proactively coming in and saying we need you to do this. It's more about, and you see it trickle through. It's more about, either somebody else, a competitor, has developed something like you're talking about, and you're rushing to catch up. But the initial driver is a client complaining about something like you just described, which gets somebody at the bank thinking, which is why we were talking about earlier, the first question that Paul asked, understanding technology is important to be able to go, okay, this person's saying, client saying this, how do we address it? And somebody, the initial bank or initial party that found the solution was creative enough to think out of the box. And so it is always going to be driven by the funding institution, whether a bank or an asset manager, challenges that they may have. But really the thing that drives it is, am I losing business because I can't do X? Because my client is complaining about Y, not that they're asking for anything.
Can I also add a point from the bank's perspective, right? We all talked about how technology is, and the session is called Trade Finance and Transition, how technology is transitioning that aspect. And the first point I can think about, and many of the banks here or fintechs here have been talking about, digitization. That's been a word that has been used, overused, and we all know about OCR capabilities that has been there. It has all shifted to generative AI. Agentic AI has been a conversation of this conference a lot. Even then, there is still a lot of challenges. We are still trying to figure out, if you're talking about doc examination, I'm going to, go trade and talk about people doing it. We still have challenges with extraction accuracies. We still have challenges with discrepancy identification. So the change is already happening, and most of the fintechs who are in the space have already started leveraging large language models. And the beauty there is, it's not just to get the digitization piece done. It's not to just improve the accuracy. It's about the reasoning behind it. And I always like to say that LLMs is going to help the human brains think better, because it's going to help you do that. And with agentic AI, it's going to help our hands do things better. So LLM helps our brains, and agentic AI are going to help our hands do things better. So with all this new tech available, we will have better results from a pure doc examination perspective. And I can already see results coming up upwards of 90% accuracies, etc., discrepancy identification, which is amazing. That's one. The second problem is we cannot talk about trade finance without talking about paper documents. So, MLETR, UCP, there has been a lot of initiatives. Still, 80% of the trade documents are still paper. So I do firmly believe that technology, AI will be not just for digitization, but will be bridging the gap between the hybrid model. There are still a lot of banks that are still using paper. There are banks that started using EBLs. So how do we bridge the gap between those? The counterparty is in a location which needs the electronic documents, but the bank has only paper documents.
Right, especially when the recipient or the sender may be able to send an electronic bill, but the receiver can't receive it because it has to go through 3 banks and a regulator to get there, right? I mean, it's a challenge all the way through. And validating the originality of those documents is a challenge, even though there are tools in place. And I had a great conversation with one of the companies here in Aegio that is able to do that type of thing. There may be other companies as well, not to put you on the spot there, Amanda. But there's technology available. But you're right, the whole digitization thing is still an issue and still very paper focused. We probably have time for 1, maybe 2 more questions. There's a lot of questions up there. Thank you, everybody. By the way, any ideas on the Everest trip planner?
Who said Maria?
That would be Nick saying Maria.
Not me.
No. No, that's Anubhav is the Everest planner. So, while we're doing that, just kind of looking at these panel, there's a lot of really great questions here. Is there any ones that you'd like to really focus on or run with?
I'm not sure. The inventory one's interesting, but it's probably fairly nebulous at this point as it comes back. But I will say after 40 years, inventory was a core part of what was offered in the trade industry back in the 80s and 90s, and disappeared with just-in-time inventory management or just-in-time delivery. So I think the answer to that question is probably look back at history, because all we're going to do is go back to the way it was in the 80s and 90s when inventory management was a core part of every treasurer and CFO's thought pattern. Dealing with inventory sitting in a warehouse is dead money. So it's to the extent you can monetize it, it's actually a huge benefit to organizations and public companies. Equity analysts always hate a large amount of inventory sitting on the balance sheet. So it's just a good way to manage the market expectations. So in terms of looking at the future, I think figuring out what the future holds for inventory, I think you look backwards and look at it when it was a core product and see how it went. The accounting rules are slightly different nowadays. They're a little bit tougher, but the same core substantive questions are asked that were asked back then, which is who bears the risk and risk of loss if the structure or the inventory transaction goes sideways.
I think the demand has certainly picked up, especially with everything that's happening.
Yeah.
You do see a little bit of a shift in how people were managing I think the larger companies. It's a very similar story to supply chain finance, slightly different form, where the larger companies that have the leverage, we're seeing them push the inventory down the chain because they can, similar to payment terms. And so what that is doing is that is creating a bit of a pressure on your tier 1, tier 2 suppliers.
Yeah.
We're seeing this in the tech sector. We're seeing this in the industrial sector. We're starting to see this a little bit in the healthcare sector as well. That's, to your point, driving the need for a inventory finance solution, especially amongst the tier 1s, tier 2s. Where you have the credit available, you could structure off-balance sheet solutions. And that's where we're seeing a big pickup in demand right now. I think this product, as it evolves, and those of you who have been in the industry for a while, supply chain finance from the first transaction somewhere around 2000 to actually becoming a profitable venture was around 2007, 8, 9. It took a 7, 8, 9 year adoption where the banks finally learned, that really works and that could be a profitable business. And I think inventory finance will take its time. The first post that 80s, 90s, I think the first transaction probably happened 6, 7 years, right? So we're right at that point where I think it's going to take off, is my view. It's much more driven by what's happening right now in the industry. It's less driven by discipline around working capital. And I think as the solution becomes more prevalent, I agree with you 100% that it will take a form of discipline. Right now, it's much more need driven, but it'll take a form of working capital discipline in the next couple of years.
And the other thing, within the banks, the people that are the credit folks and all the other components of the banks that are looking at these deals to make a decision whether to approve them or not have never seen this stuff. They're all new, they're all young, and they don't have the institutional knowledge. So it's a learning curve to understand the friction points and the real risks embedded in these transactions. And that's where your structured finance suggestion comes into. They're going to be very highly structured transactions, which requires the expertise and creativity.
Excellent. Well, panel, thank you very much for sharing your time and your expertise with us and your perspectives. Very interesting. And let's if you didn't get your question answered, feel free to find them. They're around all day. right, for the rest of the hour that this event's going on. But definitely reach out and approach them because they're very nice people, and most of them.
Civic
And
defense.
Thank you.
we'll go from there. Thanks, guys. Appreciate it.